Hey, what's up? I'm Russ. You found me. This is Dapper Dividends. We're going to look at the dividend stocks that I bought. Yeah, I'm here in the old dividend dungeon. We're going to look at the dividend stocks that I did buy, the dividends I received for the week, and a very cool and interesting momentum play after a big sell-off. I think it's overdone, and I think I'm going to be able to make a little bit of money next week. So let's get to it. Now, the bridge account I am going to be trickling money into because I have a little bit of change of strategy that I wish I would have thought of later, but I'm sharing it with you. I'm maxing out my 401k at work, and I am also maxing out the Roth IRA, which you can contribute up to $6,000 in the United States if you are under the age of 50. So I'm contributing to that. I'm going to max out the Roth, and then anything after the spillage, I'm going to be putting into the bridge account. Before I was just putting into the bridge, and I never open up a Roth. I don't know why, but it's better late than never. As they say, the best time to do something was yesterday. The next best time to do it is today. In that aforementioned bridge, I did receive $11.30 from Verizon and $64.48 from AT&T. And inside of the self-directed IRA, I received another $104 from AT&T for a combined total of $179.78 in dividends received between the two portfolios. In the bridge, I'm buying one share of Pepsi a week until I hit 100. So I'm going to be trickling money in just enough to get on top of my dividends. I'll be cutting that money with the dividends to buy my one share of Pepsi a week. So whatever dividends trickle in every week, that's going to be my discount on Pepsi. And I bought that one share of Pepsi at $145.75, which was a starting yield of 2.95%, paying $4.30 per share, added $4.30 of dividend income. Not many people are aware that Pepsi has 55% of their mixed net revenue coming from food, 26% from Frito-Lay North America, and check it out, 42% of the revenue is from outside the United States. Current dividend yield of 2.95%, as I said, paying out $4.30 annually. Payout ratio is a bit high at 70.73%. 5-year growth rate of a very nice 7.8%, and that dividend has been growing for 48 years. Simply Wall Street has a fair valuation of $177.84, which makes it about 18% undervalued at its current price of $145.56. Next up in the Roth, I bought 2 more shares of IIPR, Innovative Industrial Properties. They are a REIT. And I bought those at $173.99 for a starting yield of 3.03%, paying $5.28 per share per year, gave me $10.56 of added dividend income. They just had earnings and they smashed it out of the park. Check out the revenue up 103% from Q1 20, operating income up 125%, net income up 122%, earnings per share up 46%, and the adjusted funds from operations, which is a metric that us dividend investors really look for. If you see a decrease in that, there is a chance that the dividend will be getting cut, but not the case with IIPR, up 116% from Q1 20. IIPR is a fantastic dividend company that's a little bit of a new kid on the block. They did come out, I believe, in 2017. They are in the cannabis space, and they are providing the warehouses and the facilities that medical cannabis manufacturers use to grow their product. So I equate it to the gold rush of the 1849s, that why try and pick the successful gold miners when you can just invest in the company that's selling the pans, picks, and shovels to the gold miners. Check out that fair value from Simply Wall Street of $525.74, making them about 64.9% undervalued at the current price of $184.73. Moving over to the self-directed IRA, I bought 25 shares of ticker OHI, Omega Healthcare Investors, at $36.10. Good for a starting yield of a very, very stout 7.42%, paying $2.68 per share per year. They are a REIT. and that is good for adding an additional $67 of dividend income. So Omega Healthcare Investors is in the skilled nursing facility area. They have many other services, but think old people. Think really old people. No offense, because one day I plan to be a really old person. I hope I live until at least 100. That's one of my goals. They take care of old people, and we have plenty of boomers that are getting up there in years, and they're going to need assisted living facilities to head into. So Omega Healthcare Investors, in my opinion, has a very bright future. They were listed in 1992, currently have 95,782 beds on 945 US and UK properties with a dividend yield of 7.4%. I did point out that they are the largest skilled nursing facility focused REIT, and they have 17 consecutive years of dividend growth, paying 7.38% yield on that $2.68, 79% payout ratio. Remember, they are a REIT, 5-year growth rate of 3.47%. And if you remember, they have been growing that dividend for 17 years. Seeking alpha is not always right. Simply Wall Street has a fair value of $78.25, which makes them about 53.4% undervalued at the current price of $36.50. And I bought one little old lonely share of Cisco, ticker CSCO, at $53.29, starting yield of 2.78%, paying $1.48 per share per year, which added $1.48 of dividend income. I like to focus on how they use their cash. 51% of their cash is repaying debt, which I love to see. They are serious about paying down debt. And second, hits me in the sweet spot, 30% is used for dividends. That's a very low ratio. And 13% is for share repurchases, which will help with the earnings and increase the share price, which will return value to you. 2.82% dividend yield, again with the 148 annual payout ratio. Very low payout ratio of 45.83%, but a very healthy 5-year growth rate of 10.25%, and that dividend has been growing for 9 consecutive years. Simply Wall Street has a fair valuation of $79.23, which is about 33.8% undervalued at the current price of $52.44. And the momentum play. Now, I found this on a morning screener. Every morning, I like to look at some of the biggest drops. I'll do this about half an hour after the market opens. I'll look for the biggest percentage loser and see if something catches my eye, which it did here with ticker AUPH, Aurinia Pharmaceuticals Incorporated. I bought 100 shares at $10.23. They had much lower than expected earnings, and a lot of people ended up selling off the shares. They shook out all the weak hands. And when you do that and the price plummets, it creates a fantastic buying opportunity. More people will come in, and I think this is going to start popping up over the next week. When we look at the chart, what I looked for here was this massive gap. I drew the 2 green lines here. Most of the time, not always, but look at the chart as we go back. This is the daily chart. Almost every single gap has filled. Remember, look here, there was a gap here back in February, massive earnings. Something happened that they jumped way up. And what happened? That gap in between this red candle and this black candle filled. So what did we have here? We had a massive gap, and it might take a week or two, but I fully expect to get back to the $12 line on ticker AUPH. This green circle here, very quick crash course of the CCI indicator, the Commodity Channel Index indicator. This is something I love to use. In a nutshell, when you see it go above 200, then there's a strong chance price is going to come down as it did here. But conversely, it's like a rubber band. When you see it go below 200 and especially to the 300 range, it's going to be like a rubber band and snap back closer to the negative 100 line or the positive 100 line if it's over it. So I fully expect this gap to fill in between the $11 and $12 range. Hey, somebody at Simply Wall Street sleeping here. Come on, guys. Fair value of $116.02. which makes it about 89% undervalued at the not current price of $12.34. It did close at $10.15 today. The dividends that I did buy added $83.34 of combined dividend income. I wanted the Aurinia Pharmaceuticals momentum trade to be inside the Roth because I don't want to pay any of the capital gains taxes on a short-term trade. You would pay short-term capital gains taxes, which is no bueno. That's your ordinary income. We don't want to do that. We're going to do it inside the Roth, and I'll experience those benefits years down the line. If I've helped you out in any way, shape, or form, please ring that bell. It's free for you. It means the world for me. I would love to hear from you. We got to have some fun, and we got to laugh a little and go a little cuckoo, because why not? Let's entertain ourselves. We live once. One shot on this spinning blue ball that we have. Hey, I tell people all the time, they say, hey, how's it going today, Russ? I say, well, I'm upright, vertical, and processing oxygen, so waking up on this side of the soil means that it's going to be a fantastic day. And it is a fantastic day. Follow me on Twitter at RustyRam78. Let's chat, talk about things just a little bit. And if you want to, follow me on Dapper Dividends on Instagram. And if you like Starbucks, check out this video I did on Starbucks, and I will talk to you in that video.